Okay, it's Monday. It's August 7th, 2017. This is a follow up on Friday's trade. Again, this is Bitcoin, USD, and obviously, we're looking back, obviously, in hindsight. I'm not going to be calling any trades here in this particular update. I just want to review the strategy because these strategies, I always answer the same question: is it always going to be the same basic strategies to trade Bitcoin versus what it is that you're doing with Forex? And yes, it is basically the same thing. Now, obviously, Bitcoin is going to be at times a lot more volatile than a lot of other more stable currencies. But even if that's the case, and this is something that I always tell my coaching students, that when it becomes more volatile and more unpredictable, you can tell the overall sense of the general feeling of what everybody's talking about on the news, the reports, the economic data, political events, things, whatever it might be happening. And I always go back to whatever it might be because things move in cycles. We've got to always be remembering that. And in the beginning, when it's difficult for you to identify these cycles, you'll get a sense of something's changing or something isn't making a lot of sense or the signals aren't 100% confirmed. You stay away from it. Those signals aren't confirming because something's going on. So the technical signals is what we're looking for again, and then we follow it along with the news. So yesterday, Sunday, with our chat room group up, the weekend updates, we talked about the discussion and the news that was released about Bitcoin over the weekend. So that also helped drive price up even further today. But this is Friday's trade. This is Friday's breakout. So this is the 1 hour time frame. So again, we're using the same basic continuation breakout trade, the same one that I use on all Forex currency pairs. And it works just like this with these currencies, with Bitcoin. So I'm going to go back over here and tighten up the charts. So we've got this high, price swing high. We've got a few other continuation breakout trades, but they weren't giving us the confirmation that we needed until Friday. You can see all of the strength on that breakout trade. So I'm going to go and review this with those who, or for those who don't really understand it. So what I'm doing is a few different things here with the breakout strategy. First of all, I want confirmation that there is going to be a continued move in the direction of the breakout. That's why I call it the continuation breakout trade. This is actually the first trading strategy that I developed back in 2001. Now, what I was trying to do when I developed this method was prevent a few things from happening. First of all, we've all been there. I'll tighten up the charts again, and you can see this breakout. And as price, or as this candle was live, let's say back in 2001, we're going to go all the way back to 2001 when I first started my trading career. When I would see something like this, and I would see a candle like this one moving higher and higher and higher, I joined a lot of chat rooms just like a lot of other people did. And it never failed that the people operating the chat rooms would say, okay, we've got a breakout here, let's buy. It's taking out the previous high over here. And again, this is the 1 hour time frame. It doesn't really matter whether it's Bitcoin dollar or if it's a euro dollar or pound dollar, whatever it is, it's basically the same thing, same strategy. And when these chat room moderators would see these breakouts, they would tell us to just buy. That was their breakout strategy. That was their idea. They would look at certain indicators, and I'm sure looking back, and I wasn't exact, I mean, I can't really remember in detail what they were doing, but some of them were probably using indicators that they didn't even know they should be using or not. There are certain indicators that apply to different types of strategies, for different types of movement, different types of behavior. You're looking for different things. You have to know your indicators. So these chat room moderators would scream out buy, and within an hour or two or three, everybody was closing out their trades with a loss, because price would end up turning around and coming right back down inside of consolidation. Very often they would tell us to buy with maybe an economic announcement, the news. And I'm sure, because there wasn't a whole lot of people doing it back then, at that time, I'm sure that with the news, they didn't have things like the targets with news strategies. When you're trading the news, you're looking for these discrepancies, and you're looking for these big changes where the expected number is going to be, or the actual number is very different and much more either greater, better, or worse or less than the expected number. And sometimes that'll give you a trigger number. You've got to know your trigger numbers if you're going to be trading the news. And then, of course, you got to be trading with a broker that's going to let you get in and fill you at the right location. A lot of things can go wrong with that. But anyway, they didn't understand a lot of these concepts. And I'm sure that that's what was going on. But I hated that. I mean, I hated it. Everybody else hated it. I hated the opportunity that it looked like it was such a wonderful move. You know, here you can see that strength and you can see it moving when that candle's live. But by the time that candle would close, it was like maybe half the size of what it looked like when it was opened. And then, you know, the next few hours it would turn around and we would be stopped out. So I hated that. So I was looking for ways to eliminate that. And one of the things that I did, and I'm going to share this story because I think it's very important that you look for clues and you look for ways of trading. If you're going to insist on creating your own trading strategy, your own system, you have to look for things that make sense to you and that repeat over and over and over again. Of course, there's going to be a great deal of testing. It was for me. It took me a long time. I traded every single day. I traded on the weekends. I know you'd probably say, well, the market's closed on the weekends. But what I did was I moved one candle at a time when the market was closed. This is MetaTrader. The MetaTrader platform, but I would use, for example, Fibonacci Trader charts, and I would just hit the arrow, the right or left arrow, and I would just move one candle at a time. And I would role play. I would start all the way back to the beginning of the week, and I would just watch the same patterns. And I would review when I would have a failed trade if somebody called out a trade in the chat room that I was in, when, for example, if it was breaking out. And I tried it on different time frames. That was the other thing I want to share with you, is that you're not always going to find the right solution or the right time frame or the right way every single time. You've got to test things out. It really all comes down to how bad do you want it. If you're going to figure it out on your own, how bad do you want it? You can't quit. You can't quit. There's got to be a way. There is a way. You can't quit. That was what was going through my mind. So what I was doing, again, was role-playing what was happening here and then noticing certain things. And then, of course, learning and understanding what indicators were doing, what types of indicators I probably needed in a situation like this. And what I found was that if I waited for the close completed candle, I probably would not have entered into certain trades. Of course, you can see that after the fact, but that taught me something. By doing that exercise over the weekend and just looking at one candle at a time, every candle was closed. The market was closed. So I could only see a closed candle. And I ended up not making as many mistakes when I developed my trading system and I was testing it with the entries and the stop loss and the targets. I didn't make as many mistakes. It would almost eliminate the mistakes if I just waited for these candles to close. And I know how difficult that is when there's a candle that's rushing right into resistance and it looks like it's a powerful move and it's already moved 50, 60 pips and you're thinking, I need some of that. I want some of that. I got to get in there. Something's happening. If you don't know why it's happening and it's not a closed candle, I wouldn't recommend doing it. I wouldn't recommend getting into the trade. You have no idea what's going to happen. Sometimes that could be a head fake and it would immediately sell off and come right back down inside a consolidation. Those are possibilities. But what I'm doing here with this candle, this continuation breakout candle, this is actually my signal candle, but it's not my entry. I use an entry where I'm waiting for price to take out the high of the signal candle. You'll notice that the entry here on this one was 29.56. The high, I believe, was 52. So it was 29.52. We didn't get in until 29.56. And then, of course, we're looking for these psychological levels. Very, very effective, especially with this particular pair, just because of the volatility. Again, this is the 1 hour time frame. But notice what the Bollinger Bands are doing. So I was using and incorporating certain indicators that were going to show me clearly, just from a visual perspective, a sign of strength. The expectation that I think price is probably going to continue higher. It does every single time that things line up like this technically. And then, of course, matching things up with whatever news is available. That's extremely important. Now, when I would test this method out, and I developed this method over the weekend when I was practicing it, when I would do that weekend exercise back in 2001, when I was putting this method together, I wasn't looking at the news. I didn't care what the news was. I was just looking for these technical signals to see if, when a signal candle prints like this, does it continue? If it's not going to continue, there are going to be signs that will show up here in these indicators. And then we just simply stay away from it. And of course, just like the market works, it's not always going to be 100%. So when it doesn't make any sense, sometimes it could still move up a little bit, but I stay away from it. I stick to the plan. It's extremely important because I don't know how many times I broke my rules after I created my rules and I would lose. And I would say, well, the only reason why you lost is because you broke your rules, so don't do it. Just because it worked one time and things did not confirm 100% doesn't mean that the next time that it doesn't confirm 100% that it's going to work. you've got to stick to the plan. If it doesn't work or doesn't line up 100%, stay away from it. That's my approach. So back to the continuation breakout trade. This is the one that's going to continually provide us the best opportunities, especially for this pair, for this one, the Bitcoin dollar. So BTC USD, for those of you who are just new to watching my videos on the Bitcoin trades. So again, let's go to the larger time frames. Why is it so effective? Again, that's going to give us the best opportunities to find to identify when the trend is likely to continue, how far it's likely to go, what are some of these targets, how far could we expect it to go. I mean, it's made such a big move since last year. You know, we had a breakout that signaled over here in 2017, early 2017, and then we've got, see if I can bring this in, 1 week chart. We're going to go all the way back to 2015, 2016. So we're looking at in the 300s, and then it pops up to 700, 800, pulls back down, and then creates another breakout. This is, of course, the weekly chart. But you get what I'm sort of trying to show you is that we get these breakouts and these signals over and over and over again. And when they don't line up on the signal candle, the technicals, we stay away from it. We wait for another opportunity. But when they do line up, we trade them. So here, when this one broke out, it was pretty obvious that we were seeing some divergence and we'd probably see a retest. How many times do we have a new A, B, C retracement? And then price will go back up and take out the B high by a little bit and then turn around and pull right back down and test it over and over and over again. We talk about that in the coaching course that I share with all my members. It happens. I have this case study of this type of behavior over and over again, and it usually shows up or gives us an idea that it's going to act this way on the initial breakout. Something's going to happen here on this initial breakout that keeps us away from expecting it to move higher and then expecting a retracement. So we just stay away from it. Wait for the retracements. Here, it came down to the 382, didn't go anywhere, came back down to the 50, retested that old low. Sometimes it even goes down as low as the 618. That's where I'm a lot more comfortable in trading it. If I'm not comfortable trading this one here, because I still think there could be another retest of a lower level, then the next best choice is just to, again, wait for another continuation breakout trade, which is what we got on Friday. And now we're looking at price continuing higher. Now, there are a few things that are changing here, and I want to bring this to your attention. The Bollinger Bands, as you know, if you're following along with this method, they need to be separating away from each other on that signal candle, the breakout candle. And you'll notice that in this one, they're not separating away from each other. They're moving in the same direction as the breakout. The bottom band should be pointing straight down if we're going to see this velocity, this momentum, and this strength. This is going to signal a few different things, but you have to keep in mind, and this is something that John Bollinger teaches, that very often when there is a breakout and it's in a trending move, the Bollinger Bands are going to create more or less a channel in a trending move. This is not the first initial continuation breakout trade. I talk about this in the continuation breakout trade videos where I'm explaining how to apply this strategy and how to use it. When you see a continuation breakout signal candle like the one from Friday, one of the first things that you need to ask yourself, and this is regardless whether it's a daily chart or a 1 hour chart, I don't use the continuation breakout trade on any time frame smaller than a 1 hour chart. That's as low as I go, is the 1 hour chart. So whether this is a 1 hour chart, 4 hour chart, or daily chart, when you see a continuation breakout signal candle like this, the first thing I ask myself and that you should ask yourself is, was there or are there any other previous continuation signal candle breakouts, and has it already hit its target? Has it already fulfilled its target? Now, we're looking at the daily chart. This is starting to create the channel in a trending move. There were already prior continuation breakout signal candles that have developed. There are already signals, and it has not hit even the first target here at 38. So we've got a long way to go. Now, when we saw this consolidation over the last few weeks here, one thing that I kept repeating over and over again, and again, we've got to be careful with the signals. If we're going to be day trading this, and we're going to go down to the 30-minute and the 1 hour time frame, we've got to be really selective about the trading opportunities that we take and realistic on our price targets. We can't get into a trade if we can clearly see this kind of consolidation here on the daily time frame, but we go down to a 1 hour chart and we find a trade and we're expecting a huge move to 38. It doesn't make any sense until we see the trend resuming here on the daily time frame. This is where everything really starts, and this is what's going to give us a better indication of what is going on with the overall trend. It's not, yeah, every once in a while I meet people that say, is Bitcoin a bubble? It's at really high levels. And that's the same thing that I said back in October and November. The Dow wasn't going to stop. A lot of people expected that things were going to change once Trump got into office, and we talked about that. The Dow was not going to stop, and the dollar was going to behave the way you can see those videos, the update videos on the U.S. dollar. Same thing. So what I'm getting at is that we do have another signal. Be aware that it is creating a channel, but for obvious reasons, there have been previous setups, continuation breakout trades. Again, if we're going to go long, we've already locked in profits here at this point, but if we're going to go long, we'll get another signal. Right now, we're expecting a little bit of sideways movement, and then we'll do another update probably on Sunday on the daily time frame, again, to take a look at where this is going. But again, this is our first target here, 38. I'll share some of the other targets that are a lot higher than that in the weekend update.